Because Bitcoin is a lot like your attention asset. People don't pay attention to it, so the volatility goes down and the price goes down.
Yeah.
And then once people start paying attention, volatility and price tend to be correlated together on the upward. What we're observing this summer is actually a divergence. Volatility is going down, but Bitcoin is still teetering on the edge of hitting 120 again and potentially higher into Q4. So that's been remarkable to see. I think it speaks to the fact that there is a floor and that institutional adoption is here, for which we've seen consistent demand for Bitcoin ETFs. This summer, we had the second highest source of flows in its history since inception, in a way that isn't something you would associate with a summer cycle.
Okay.
So I think there's a lot to be excited about.
From Wall Street to Washington, Bitcoin's fate is being tested, not just by market swings, but by the policies that could shape its future. Bitcoin slipped below $110,000, down more than 10% from its August peak, has reignited debate over volatility and risk. With $1.8 billion in liquidations shaking crypto markets, many wonder if Bitcoin's turbulence is stabilizing or simply evolving. Jeff Park, Chief Investment Officer at ProCap BTC and advisor at Bitwise Asset Management, argues that while daily swings may narrow, extreme fat tail events will always remain. Volatility, he explains, isn't just about rolling standard deviations. It also includes jump risk, when an asset appears calm before suddenly surging or collapsing by double digits. This pattern, Park notes, aligns Bitcoin more with commodities like oil, which, even with deep liquidity, can still experience violent shocks driven by scarcity and supply disruptions. Adding to this perspective, new research has introduced advanced value at risk (VAR) models designed for today's complex market conditions. By leveraging heavy-tailed distributions and rolling estimations, these models outperform traditional approaches in capturing volatility and tail risk. Results show Bitcoin and crude oil as the riskiest assets, gold as the safest, with stock markets falling in between. For investors, the takeaway is clear. Bitcoin may be maturing, but its commodity-like risk profile demands smarter tools and more adaptive portfolio strategies. This is only the beginning of Bitcoin's journey. What comes next could redefine the entire financial landscape. The real story is still unfolding and you won't want to miss it. So stay tuned, hit that like button, subscribe, and ring the bell to stay ahead of the curve and catch every breakthrough as it happens.
I think over time, what we'll see is that the general range of Bitcoin's volatility is probably going to be more constrained, meaning that the fat tail events are probably less likely day to day. At the same time, I don't think it means that they'll go away, which is the reality that volatility can be measured in a lot of different ways. On one hand, the most classical definition is measuring the standard deviation over a 30-day rolling period, which shows you what a normal distribution of a stock movement could look like. But volatility can also mean something beyond that, to a second order effect of like a jump risk. So, having a volatile stock for the sake of daily volatility is different than something that's not volatile for a while and then one day moves 100%. That would also be called volatile. It just has a different quantitative characteristic to it. So my view is that Bitcoin will always have big tail risk, both to the left and to the right of the curve, mainly because that's how commodities trade. This is the big win, of course, in Bitcoin being defined as a commodity and not a security. And in that sense, think about oil, for example. Oil is one of the most liquid commodities on Earth. And yet there are days when you wake up and oil prices jump dramatically and decline dramatically. That's just the nature of what it means to have a scarce asset, where there can be supply shocks and otherwise deliverables that are possible. And Bitcoin is exactly the same thing.
Interesting.
I actually am pleasantly surprised by how well Bitcoin's been performing recently in the summer.
Why is that?
Usually the summer tends to be a pretty boring period for crypto. If you look at the studies of Bitcoin's outperformance, it tends to be in the Q4, Q1 timeframe. And the Q2 to Q3 timeframe is pretty lackluster. I do think there's some seasonality embedded in why Bitcoin behaves this way, but the truth is that this summer, it's been explosively dominated by crypto news. We just mentioned the stablecoin legislation having been an event during the summer in a way that really is somewhat historic.
Yeah.
And on top of that, this particular administration just has so much agenda to get through before the next election cycle would take away some of the news source. And so the urgency and the rush to get things done was really front-loaded into the summer. And I think that has created some upward movement for the stock. and Bitcoin, but at the same time, we're at very low historic realized and implied volatility. Implied volatility and realized volatility are both kind of in the high 30s these days. Those are half of the Netflixes and the Nvidias of the world. It's actually sometimes been observed that gold had a higher volatility than Bitcoin in the past 2 months as well. So even though it's been muted, the price has either stayed consistent or kind of gone up in a range-bound way. And the reason it's surprising to me is because usually when Bitcoin doesn't have volatility, it tends to creep down. Because Bitcoin is a lot like your attention asset. People don't pay attention to it, so the volatility goes down and the price goes down. And then once people start paying attention, volatility and price tend to be correlated together on the upward. What we're observing this summer is actually a divergence. Volatility is going down, but Bitcoin is still teetering on the edge of hitting 120 again and potentially higher into Q4. So that's been remarkable to see. I think it speaks to the fact that there is a floor and that institutional adoption is here, for which we've seen consistent demand for Bitcoin ETFs. This summer, we had the second highest source of flows in its history since inception, in a way that isn't something you would associate with a summer cycle. So I think there's a lot to be excited about. One amazing stat I will share with you is the balance sheet of the Federal Reserve back in 2008 was something close to $800-900 billion.
And then it went to trillions.
And so that's about 6% of GDP. And if you were to equate that growth linearly with our GDP growth as we've experienced for 20 years, that balance sheet should be roughly around $1.5 trillion. Today, it's not $1.5 trillion. It's $7 trillion, which means it's 20+% of our GDP.
Bitcoin just took center stage in Washington, but the market's reaction shows the real battle for its future is only beginning. Bitcoin markets swung sharply after President Donald Trump signed an executive order to establish a strategic reserve of cryptocurrencies, relying on tokens already held by the U.S. government. While the move signaled recognition of digital assets at the highest level, it underwhelmed investors hoping for a bold plan to purchase new tokens. The disappointment was immediate. Bitcoin tumbled 5% to $85,000 before clawing back to $89,200 in early European trading. Jeff Park, Chief Investment Officer at ProCap BTC and advisor at Bitwise Asset Management, cautions that executive orders, though headline-grabbing, lack permanence. They can be reversed with each new administration, offering little long-term certainty. Park argues the true breakthrough will come only with a congressionally approved strategic Bitcoin reserve, an initiative led by Senator Cynthia Lummis but still in early stages. Such legislative backing, he notes, would cement Bitcoin's role in U.S. financial strategy far more credibly than temporary executive action. Looking beyond Washington, Park highlights that Bitcoin adoption at the sovereign level will require global coordination, particularly with allies like Japan. Once Japan signals support, it could unlock broader international momentum. For now, Trump's move underscores Bitcoin's rising importance, while reminding markets that the real story has only just begun. Let's get back to the interview.
I think that there's a difference between an executive order mandate to buy Bitcoin as a strategic asset versus a congressional mandate. And what we're seeing is the ability to have a conversation around the more important aspect of the congressional mandate by having opened the path by Trump's adoption of the executive order. But the truth is, executive orders are fallible. They can be turned by the next administration if the political views don't align, and they're not stable because you don't have the embedded mandate of the people. So I think the real use case will be that we first need to get a legislatively approved strategic reserve, which I think we're quite far from. And we know Senator Lummis has been a driving force for it, and she is working very hard to build coalition around it. But I think until that happens, the idea of an executive order strategic Bitcoin reserve purchasing Bitcoin is maybe not the most useful kind of permanent capital vehicle that we can imagine. And so if you are coming from that perspective, it's probably not like the most important sign to think about the totality of what the U.S. is doing with the dollar hegemony at risk. So, my view is it will be inevitable that governments will buy Bitcoin on their balance sheet. This is something I feel very strongly, but I do also think we have to be patient about it, where it is not likely a rogue decision. So the view that I've shared in the past with others is because the US is one of many in its global alliance across the trading partnerships and the economic order, there is a social contract in which how we trade with countries like Japan, where the dollar serves as a role for the transfer of goods and capital. And in an ideal fashion, if you were to adopt Bitcoin as part of your treasury asset, it will make sense to me that you do it with some global coordination with your allies, because it would be a slight betrayal of that social contract if you were to stuff, let's say, Japan with all your long-dated treasury bonds and then didn't give them a heads up and just bought Bitcoin on your own, where the very kind of crisis confidence that would otherwise arise is one where they're not being attuned to. So the signs that I think I would wait for to see when a real strategic Bitcoin reserve adoption would happen would be some kinds of global partnership dialogues that are emerging. I think Japan is the one you should be paying attention to, because they have been so far the most kind of quiet around the role of Bitcoin as a developed market. But once you start seeing Japan embrace Bitcoin, then I do think we're ready for that dialogue to happen at the country levels. Yeah, I think for those who are just beginning their Bitcoin journey, there's a lot of things that can appear scary. I think you and I are both used to it now because we've overcome that hurdle, but you have to kind of close your eyes and take a step back and remember what it was like when you first clicked that button to actually acquire Bitcoin, and what it meant to memorize your private seed keys and things that are not natural muscle memories. And the fundamental principle of Bitcoin at the core is non-custodial self-sovereignty, right? In theory, that sounds great. In theory, the idea of the sovereign individual is the most powerful thing that you could ever hope for. But the truth is, most people actually don't want that much power either. I do share this belief at some level that Bitcoin is going to be the gateway for many people to enter the arena of crypto. And at the core, you spend enough time in it and you dibble dabble a little bit on MetaMask and push different buttons and get to experience DeFi, and all of them eventually come back to Bitcoin. And there's a really good reason for it. Bitcoin is the scarcest, hardest asset known to man. And it is the social covenant that I think will supersede the dollar as we've known it, in a way that hopefully in the future will be synergistic for both American exceptionalism.
In the end, Bitcoin's story is no longer just about price charts and market swings. It's about its evolving role in the global financial order. The recent policy moves in Washington, the push for stronger risk models, and the growing discussion of sovereign adoption all point to a future where Bitcoin stands shoulder to shoulder with traditional assets. Yet the path forward will not be shaped by short-term volatility or symbolic executive actions alone. It will be determined by lasting policy frameworks, international coordination, and the willingness of governments to recognize Bitcoin's place in a changing monetary landscape. For investors, that means the real opportunity lies not in chasing headlines, but in preparing for the moment when Bitcoin shifts from speculation to strategy on a global scale. Could Bitcoin's path to becoming a true strategic reserve asset depend less on price action and more on when global powers, starting with allies like Japan, decide to officially embrace it? Bitcoin's future will be written by those who act, not those who wait. If you found this valuable, don't forget to like, comment, and share with your network, and subscribe for more sharp insights. Stay smart, stay invested, and stay ahead of the curve.